If 2024 was the year of the NAR Commission lawsuit settlement, could 2025 be the year of the Loan Depot loan officer compensation lawsuit? And just like the NAR settlement had massive impact and still has ripple effects all throughout the country, will this lawsuit, a class action lawsuit against Loan Depot, have a ripple effect that goes felt by every lender and every broker alike? And this is just the tip of the iceberg. Well, short answer, yeah, I think it will. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC
John Coleman.
Dio, what's poppin'?
Well, John, normally I'm super chipper and happy when you ask me what's poppin'.
Yeah, but what, today you're not? Thank God.
I had to go to the cardiologist. Want. Straight up fun sucker. She was the fun sucker, and my wife was in the room to witness it.
It's a progress report, and instead of getting satisfactory, S's down the board. Remember those? Remember in between report cards, people would get like a progress report to be like, ma'am, your son is fucking out of control. Please contain him.
No, not everyone got those. Usually we got the S's for satisfactory.
Satisfactory, and then N for non-complete, or what was I forgot the
letters.
No,
it's just unsatisfactory, satisfactory, or non-applicable.
Yeah. So you got like the parent-teacher conference, and she went through your records like, yeah, you've been fucking up. You haven't been doing what I've been telling you.
Wrong. No, I've been taking my medicine like they prescribed me after I got to the hospital.
They poked you, they pulled your blood, and they said, still not good enough.
They put me up on an EKG. My heart rate looked great.
So what's the problem?
In fact, my blood pressure, the medical tech who did my blood pressure goes, man, I wish I had that great of a blood pressure.
They're paid to say that, just like when you check out a TJ Maxx, it's like, ooh, where'd you get this top? I love it. It's called like sales reinforcement.
Is that right?
Yeah, God, Macy's, Bloomingdale's like, ooh, this is a cool jacket. Yeah. Knowing damn well they can't fit in it. Anyway, but yeah, go ahead. No,
so the fun suckers basically, I was planning on doing my Ironman 70.3 this December.
What does 70.3 stand for?
70.3 miles is the race.
Okay. I thought that was a radio station.
No, you thought Ironman 70.3. You're tuned in to Ironman 70.3
like it, but no, that's
broadcasting.
That's how many miles you're trying to do with AFib. Sounds like a Netflix.
AFib's not something you like have all the time. It's just you're either in AFib or you're not in AFib.
So like a flare up.
Yeah, like a flare up. So anyhow, they frowned down upon me training for my 70.3, and then they said, you really shouldn't be drinking alcohol either because it triggers your AFib.
Double middle fingers to everyone in the room. Hold my beer. Watch this.
Yes. And look, I'm totally fine not drinking alcohol most times, most days.
But, however,
I'm doing the Bourbon Trail in October when I'm in Cincinnati.
Yeah.
Wait, am I going to go on the tour and not the tastings?
Or do they have
like you and I are going to a Cubbies game next week. When I'm in Wrigleyville, guess what I get to do now? Order some of that really good old O'Doul's.
Yeah, that's exactly. I was going to say, I'll get you some O'Doul's.
Actually, I'm going to drink some Go Brewing. And my friends at Go, if you're tuning in, Aaron,
I saw those in your fridge. I almost reached for it.
I was going to warn you. I was going to warn you not to grab those.
I saw the words NON on the front. And I was like, yeah, it's not for me.
Yeah, but Go Brewing is an amazing craft brew. They specialize in non-alcoholic. So I'll be in Chicago. They're from Chicago. Let's just hope down in Wrigleyville I can find some Go Brewing on draft. And I can at least have the placebo effect that I'm having a beer at a ball game. But, whatever. I'll get over myself. As my wife reminded me, I have 40, 50 more years to live. Is that one drink, is that one sangria, that one margarita, that one old fashioned really worth it? If I can just slow things down for the next 4 or 5 months, take it easy. They didn't say I couldn't train. It just means I can do like a 5-mile run, not a 12-mile run. All right, so check this out. I'm going to be a little bit
antsy.
Not antsy. I'm going to say I'm a little bit passionate about this particular topic. It's a topic that we have covered multiple times over the past 2 or 3 years. Mm-hmm. I know I don't make that many friends in the mortgage industry when I talk about the topic, but I think I have like a leg or 3 to stand on when we talk about it.
Tripod.
Yeah, so let's dig into it. So currently, Loan Depot is being sued class action by a bunch of borrowers, and I think potentially even ex-loan officers. We're going to dig into that lawsuit. I'll bring out my phone we'll see what my friend Jim and I had to say.
Okay.
But as I read the article in Housing Wire, it was like a whole shit moment. Like this could be the tip of the iceberg because in a nutshell, the world according to Dustin Owen, as I read the article and the way I understand the lawsuit, that there are consumers alleging that Loan Depot forced their loan officers to sell higher interest rates for the sole purpose of paying the loan officers more money. And if the loan officers sold those higher interest rates to the consumer, then the loan officers were to get paid more money. But if the loan officers could not sell the higher interest rates and they had to sell a lower interest rate, then Loan Depot, as the lawsuit alleges, then punitively penalized the loan officers by reducing the commission that they paid because that loan officer was unable to obtain unable to sell an interest rate to the consumer that was as high as Loan Depot wanted it. Right? That's me paraphrasing. Mm-hmm. Now, here's what I want to say early on in this episode. I feel for Loan Depot. Loan Depot could have been insert 500 other mortgage companies. Literally, insert 500 other names. It could have been you. Right now, could have been Loan Depot because they're a top 10. Could have been Loan Depot because they're so involved in their sponsorships and they're seen all throughout the country. Could have been Loan Depot because one of their executives was terminated and then put in a whistleblower complaint, and this is the fallout. Like, sure, but please, if you work at Loan Depot or you represent Loan Depot, I feel for you because it could have been 400 other companies. You all were the ones that were like randomly selected that you didn't want to have your name selected, kind of like in the Hunger Games, right? That's when you don't want your name drawn, right? So if it's that free Big Mac that you're going for, John, you're like putting in like triple entries.
Who was the snitch? There always has to be a snitch.
Yeah, there was an executive that was terminated, and that executive felt like they were wrongfully terminated due to being a whistleblower. And then it was through, my understanding is, again, I haven't read the entire class action lawsuit as it was filed, but I read an article that Housing Wire wrote covering the class action lawsuit. But my understanding is that executive and the investigation that had happened was part of the catalyst of this lawsuit going class action.
So what's going to happen? Is this one of those lawsuits that when it's all said and done, they're going to like settle and everybody involved is going to get like $16 as like a payout, or is this going to be something where like legislation changes, so like moving forward, companies will have to operate differently?
Yeah, I mean, look, at the end of the day, Ari Karen's going to get paid, right? He is the attorney that is representing the plaintiffs. He's not representing Loan Depot. He's actually representing the plaintiffs. So the attorneys always get paid. And by the way, Loan Depot's attorneys, they're going to get paid too, because they have to defend Loan Depot, and Loan Depot's going to have to pay their huge fees. So the attorneys always win.
Let's sue somebody today. That's what they wake up and do. Let's sue somebody today.
Now, I'm sure someone like Ari may only get paid if the plaintiffs win or if it goes to settlement, at which point he'll get his cut. I mean, if they totally lose, then maybe he's out hundreds of thousands of dollars in time and legal expenses. But he is the attorney on record, and he's a pretty well-known attorney in the mortgage space. What's interesting about the lawsuit is Ari has spent a lot of his career actually defending lenders. So, now it's interesting to watch him take a case for the plaintiffs, where typically the lenders or his client is who he's defending. He's now representing the opposite side of the transaction. Personally, I don't see anything wrong with that, but I know there's a lot in the space that may be a little bit, panties in a wad, upset about it. So here's what I see that's going to happen. Actually, you know what? Let me do this before I pontificate, as you like to say.
I never say
what
that
I see
word.
happen.
I never say pontificate.
You don't use pontificate?
I mean, I've said it before in my life, but I don't think on this
juxtapose.
podcast.
Is that one of your words?
Juxtapose is I use more.
Okay.
Often,
a Luddite.
That's a Luddite.
That's one of your words
that's
too.
You, sir.
That's me. Walking, talking Luddite.
Yeah. As you
pontificate
on how to unlock your phone. And
my phone's unlocked.
Open the app.
It's opened up too. All right. So I went ahead and asked my friend Gemini. I said, Gemini, currently Loan Depot is involved in a class action lawsuit where mortgage borrowers are suing for damages, claiming that Loan Depot violated loan officer compensation rules. Please give me the 5 main bullet points of this lawsuit.
RESPA, Section 8, number 1.
good for you, but you're not going to arrest with Section 8 because that's more of a settlement service provider.
Shit.
This is like straight out of Dodd-Frank. This is probably Reg Z more.
Okay, right.
More
That's what I was
likely.
going to go. That's my next
You're
one.
probably going to go Reg Z next, but it's loan officer compensation, which, by the way, for the record, because the entire industry has just thrown this out the window. And the entire industry right now is long overdue a overhaul of LO compensation. I will go on the record of saying that. Mm-hmm. The way that I personally believe, Dustin Owen, 20 plus years mortgage career dude, I feel like the current rules were needed when they were put in place. But at this standpoint, they're too vague as well as restrictive. And I do believe that the consumer ultimately paid more money for their home loans because of LO compensation rules than they did obtain better deals. Mm-hmm. But I also believe that nobody was taken advantage of because of LO compensation rules, whereas before them, we left it available for people to get totally taken advantage of. However, when you're in a open commerce, supposedly capitalistic market, should it not be a little bit of buyer beware? I don't know. Like that's always the balancing act that the regulators and politicians have to play. But what I will say is that as a loan originator, we are not allowed to make more money because we gave someone a higher interest rate and less money if we gave someone a lower interest rate. And that's exactly what is happening when someone quotes one rate and when the borrower says, that's too high, my credit union gave me something lower, and then you offer something lower, but in return your company says, but I can't pay you 125 basis points. I need to pay you 50. Okay, that in my assessment, I'm not an attorney, but that in my assessment could potentially be anti what LO compensation actually stands for. No different than if I'm a mortgage broker and I show a customer borrower paid at 7%, and at 7%, I'm making 275 basis points. But if they're willing to just pay me 1% up front, and I drop the rate down to 6, and now I go borrower paid, now all of a sudden, that person gets a cheaper interest rate. Now, the broker community, they're going to tell me that's not a violation because I went from borrower paid to lender paid. But I would say back to them, then if I'm auditing you, why didn't you give everyone that opportunity to go borrower paid? Right? And I think it's a little bit more in the broker's favor to win that argument than it is in the banker's favor to win the argument. But I still believe across the board, we as a industry haven't been following the LO compensation rules as they were drafted and as they were intended. I also do believe they are punitive for the consumer. And my belief is this: we should either have rules and freaking enforce them or do away with the rules because they're not needed. And I'm in the camp, do away with the rules. Do away with them and let's go back to the way things were. But I'm going to caution all of my LO friends out there. I promise you, because I got to work in both worlds, y'all made less money when there was LO compensation not in place, right? So when the rules weren't in place, that meant you got a raw rate sheet and you got to price wherever you wanted to, and you had some kind of a deal with your broker or with your branch that you made X percent of whatever you were able to collect, whether it was in the back or in the front or sometimes both, meaning I charged one up front, I made one in the back, I made two total, and then at which point I could make 50, 60, 70% of what I charged. Y'all on average made less money, period. Mortgage branches on average made less money. Mortgage companies on average made less money. Now, mortgage companies make way less money today than they did 10 years ago, 20 years ago, but that's because the cost to originate have gone up so much, and the cost of regulation had gone up so much. So I probably digressed, and I'm probably going way too fast for the listeners at home, but I want you to stay with me. I had to get a couple things out because I didn't want someone to think, oh, Dio's pro-broker or he's anti-broker, he's pro-banker, he's anti-banker. No, I'm pro the mortgage industry. And I do believe our industry as a whole has been overregulated. I do believe our industry as a whole has these LO compensation rules that have not been properly regulated, at which point we all have run amok. Most of us are openly violating. Some of us are playing too much in the gray area. And if I had it my way, I either want them to be enforced, known, and followed, or totally wiped off the map and let's go back to the way things were. And if I had a vote today, I'm going to go for wipe them off the map. Let's go back to the way they were. I'm going to take my chances that I'm going to make less money the way that the LOs back in 2010 made less money in terms of basis points on a transaction than LOs do today. Follow me? Somewhat, or have I lost you?
Is Loan Depot still a great place to work?
I've never worked there, so I can't answer that.
Well said, Dustin.
Yeah.
You media trained.
Yeah, I mean, it would...
So how long do you think they've been doing this? For like the past 15 years, and they're now just getting caught with their pants down?
5 to 7. All of us.
Damn.
Yeah. Hashtag all of us, Greg Scheer. And Greg and Greg gets that. Like, he understands. He's following this case too. All of us. We all have been dealt the same crappy regulations. We all have been pushing the envelope. And each year that passes and nobody's getting their wrist slapped, nobody's being sued, nothing's making major news in terms of like a regulatory enforcement, then guess what we do?
Send Loan Depot some edible arrangements for taking the fall for everybody else, so now we can adjust how we do business. Shout out Loan Depot.
Okay, you may want to say that, or you may want to say, God dog it, Loan Depot.
What the fuck are you doing? Why'd you mess it up for everybody?
How did you get your hand caught in the cookie jar? Now they're going to start looking at all of us.
Yeah, because you know why? Because they had the snitch on the inside. That's what happens when you have disgruntled employees that leave, man. They'll burn the whole house down, scorched earth.
Yeah. So here we go. These are the 5 recaps that I told the audience I was going to give them.
Okay.
So it goes like this. A class action lawsuit has been filed against Loan Depot alleging that the company violated federal loan officer compensation rules and engaged in deceptive practices. Keyword there, deceptive. Here are the 5 main bullet points of this lawsuit. Violation of federal loan officer compensation rules. The lawsuit claims that Loan Depot systematically tied loan officer compensation to the interest rates and fees charged to borrowers. This practice is prohibited by the Truth in Lending Act and federal regulations under the Dodd-Frank Act, which aim to prevent LOs from steering customers into more expensive loans based on their compensation. Now, I'm going to tell you, here's what Loan Depot is going to say.
Okay.
We didn't steer people into more expensive loans. We set our price the way a car dealership sets their MSRP. And then when consumers refuse to purchase our product at MSRP, we had to offer them discounts in order to get the consumer to want to do business with us. As we did our discounts, which was a favor to the consumer, it benefited the consumer, it didn't hurt the consumer, then we had to take out some of the revenue that we were no longer earning out of the loan officer's commission check. Okay, that's exactly what Loan Depot will say. But then the lawsuit will probably come back over the top if you're the plaintiff's attorney and say, people's elbow from the top rope. Hey, shout out to Hulk Hogan who lost his life this week. They come off the top rope with the people's elbow. I know the people's elbow was The Rock, by the way.
And they didn't do it from the top rope. It was
Hogan couldn't get up the top rope. He probably got to the middle rope. But anyhow, we digress. Let's not digress. So
I like how you scold me. I like how you scold me. Wow, of all people.
Of all people.
Go ahead, yeah. As the legislation did something.
No.
Fuck, man.
My bad, John. My bad, dude. I'm sorry. Lo siento. All right.
Sorry.
So, but anyhow, what then the plaintiffs will say is, then why didn't you give everyone that cheaper interest rate? Okay, cool. Let's go on to the second bullet point.
Okay.
Steering borrowers to higher rate loans. Plaintiffs allege that Loan Depot incentivized its loan officers to push borrowers towards loans with higher rates and fees. This steering, quote unquote, directly benefited the company and allegedly the LOs through increased commissions.
Yeah, that makes sense.
Yep, but Loan Depot is going to say, no, the commission was set. And then as we had to give discounts to the consumer to price match, then we had to reduce the commissions to the loan officers. However, one would then argue, but that's a blatant violation of LO comp. Then one would argue, then we should amend the way these LO comp rules have been written. And I would say yes.
But you're not on trial for that.
No, I'm not. And by the way, I wish they would. If y'all want to call me in as an expert witness, I would love.
Oh God,
I would
Dustin
love
his
to take
law
the
and
stand.
order moment when you hear the gap.
I would love to take the stand on something like this. I feel like I know it inside and out. All right. Next bullet point.
Okay.
Concealment through falsified records.
My favorite.
That sounds dirty, John.
That's cool for me.
All right. To hide these illegal compensation practices, the lawsuit claims Loan Depot created a system of falsified internal forms and federal disclosures. This included requiring LOs to falsely document reasons for internal transfers of loans, often blaming borrower request when the actual reason was to reduce or eliminate commissions for loans that didn't meet the higher rate targets.
Yeah, that's kind of grimy, actually.
All right. Fourth and then fifth bullet point. The fourth bullet point, punishment for noncompliance. Ooh, no one likes to get punished, especially you, Mr. Aquarius. Loan officers who failed to secure higher rates for borrowers faced significant penalties, including reduced commissions or even no commission at all on those loans. Furthermore, LOs who refused to falsify the internal documentation to conceal the scheme, were also allegedly denied their compensation. And then the fifth bullet point that my friend Jim and I gave me, seeking damages in class certification. The plaintiffs are seeking actual and statutory damages, including the return of finance charges and fees paid by affected borrowers. They are also seeking to certify a nationwide, that is scary, a nationwide class of borrowers who received loans from Loan Depot's retail channel between January 2019 and present, and whose loans were impacted by these alleged practices. The lawsuit also suggests potential violations of federal criminal statutes. So where do we go from here? If you're running a company, you already have your butt pucker moment, right? Like this lawsuit is your butt pucker moment because it's basically like saying, holy cow, someone is talking about what we don't talk about out loud.
Fight Club.
Yes. They've discovered Fight Club. Now they're going to come for all of us. And wow. I think that's when I did the soft open for the show, I said, y'all, this could be the mortgage industry's NAR moment. That NAR commission settlement, that was a big effing deal. You and I started talking about it before the rest of the world started talking about it. And then once it hit, that thing came at us like a freaking missile. I thought for sure it'd get kicked down the road. It'd get kicked 1 year, 2 years, 3 years.
Nope.
It'd get caught up in appeals. No. I mean, they started settling and holy cow. And there's still battles going on behind the scenes. So the fact that Loan Depot's been named in a lawsuit that could have happened to any one of 400 plus lenders, I think is going to be a massive eye-opening experience. So for the rest of us, let's be aware of it because we are going to, potentially start getting some new LO agreement sent to us by our home office.
Sign it.
And you at least want to know why. And by the way, your home office isn't doing something that no one else is doing or no one else shouldn't be doing when they're sending you a new agreement. We're going to hear in the news a potential, and there's been a great white paper that was written by the Community Home Lenders Association. And shout out to that whole entire organization because they do a phenomenal job. But they started with a white paper that basically was talking about the reason why we need to dismantle LO Comp. So who knows? Maybe this lawsuit gets dismissed because the CFPB that's basically defunct, the little bit that is still there, turns around and says, lawsuit's bullshit, and we're using this as our reason to expedite just removing all the guardrails, and we're going to go back to the way things were prior to Dodd-Frank. Like, could that happen? Sure. I think the higher likelihood, though, is someone coming in saying rules are rules. These were the rules from 2012 all the way until present day. Regardless of what we do going forward, y'all violated. And if you violated, how many other consumers are going to want to follow suit? How many other copycat lawsuits are going to be out there? And what are they going to do, not just to your company or that wholesale lender that you broker to? What could they actually do to the entire industry to change the way things are done?
Is this something big enough that could like take down Loan Depot and the whole company to where like they'll get bought by somebody else? Is more like a slap on the wrist, black eye that'll heal? I
mean, look, it's been prognosticated that Loan Depot was going to be purchased all the way up to where like Zillow was going to purchase Loan Depot. Has been a rumor being tossed around this entire year. So I don't know enough about Loan Depot and enough about these types of mergers and acquisitions to know if this lawsuit would be a accelerant or if it would actually be a roadblock.
So the frat house knew they were going to get acquired, couldn't tell anybody, got sloppy and loose at the end, got caught, but they're on the way out, so who cares?
I mean, maybe, but maybe not. I mean, like Anthony Hayes has now come back to Loan Depot. That was a big deal because he was its original founder. He was once ousted, then he came back, and then there's a whole rumor of why did Anthony come back. I mean, I think this lawsuit is just something that was unfortunate timing if they were looking to get acquired. I don't think it's ever good to try to get acquired while you're being sued because the acquiring company does not want to take on that liability.
Cut the price.
Yeah, so I don't think that's going to happen. But I think for most of us, look, we have to go on with our business.
Yeah.
Like it's our job to get a lead. We talk about that all the time. We coach people at T-Lops Originator Coaching. It's your job to get a lead. You should be focused on your personal brand. You should be becoming the subject matter expert in your local community that you serve.
You work for ULLC.
Yes, like that needs to be your focus. These things could be distractions if you focused on them, but we also want to know what's going on in our industry so nothing ever comes out of left field and sucker punches us, right? So you at least know because you tuned into T-Lop, hey, this is going on. DO and JC will continue to cover it. And if we start seeing policy changes, whether they're from the aggregators we sell loans to, the investors that we broker loans to, or just internally within our own company, cool. Please know that there are lawsuits like this going on. There's also been talk about just rebooting LO Comp altogether. I know the NBA's a proponent of rebooting LO Comp altogether, that we as originators should very well start seeing and experience some form of change that we weren't accustomed to the prior 5 years. That's what I'm telling people.
Well said.
And I want them to be in the know so that they're not totally ignorant to the profession that they're a part of. That's simple, John.
I just see this as just one more piece of the pie crumbling off the mortgage industry, and I love to see it.
Why do you love to see it?
I just love seeing shit fall apart.
You're just the king of chaos.
Not king of chaos, but I enjoy watching things fall apart and then watching everybody else scurry to try to like explain why it's not falling apart as it's crumbling before my face.
But do you then get excited to build it back better?
No.
So just everything goes away.
Change is the only thing that's constant in the universe, Dustin.
Okay, so you like seeing change happen.
Yeah.
And then you're okay with the chaos that comes with change.
Chaos could be looked at multiple different ways, Dustin.
Okay. I just don't want to have a negative feel like we're like in this industry that I love that's given me so much. I would hate to be like no one on our team's like cheering for it.
No, I hope it doesn't like, do whatever it does, but it's probably time for, you got to shake the tree, make some change.
I agree with that. No, there is a certain part of me that saw this lawsuit and went, yes.
Okay, so let's talk about that for the next 16 seconds so we can put a bow in this episode.
No, yes, because I've been of the belief over the past 3 to 5 years that we as an industry got out of whack. Mm-hmm. I either want the rules to be enforced.
Rules are rules.
Or I want there to be no rules.
No rules.
What I didn't like is the past 5 or 6 years.
Quasi rules.
There were rules and there was what everyone did. And because everyone did it and nobody got in trouble, then it got worse, not better. And then all of a sudden, it's an unlevel playing field. I want a level playing field at all times.
I know what that feels like because I saw a baseball game yesterday where the ump was calling it all over the strike zone. You know what that's like?
Yes.
Like when the ump calls like, that's a strike, and then the next one low in the strike zone is a ball.
Yeah, you lack consistency.
Correct.
Yes.
It's like a shitty ump.
Yeah, it is hard to live your life and run your business when you lack consistency.
Well said.
And the way things have been done the past 6 years, total lack of consistency. Mm-hmm. I said yes. Insert your Napoleon Dynamite, right? Yes. I said yes because I'm looking for certainty. I'm okay with change. I'm okay with the fallout and the pain that change would bring, but because I do see change as betterment, right? If you're not growing, you're dying. This is a chance to grow, even if that growth comes with a little bit of pain.
There it is.
There we go.
There it is.
Alrighty, y'all. So if you appreciate content like this and you just tuned in for the first time, make sure you're sharing us. Go over and subscribe to our YouTube channel. Our YouTube channel is a great place to watch the podcast, but better yet, we drop free sales training and mortgage coaching videos on that same YouTube channel. If you have not subscribed yet to my newsletter, please do so. It will reward you with market updates and sales tips and a whole bunch of great information that you probably didn't know until you read the newsletter. You can do so on our website, TLOP Online. That's tloponline.com. Sign up for the newsletter. And then finally, if you're one of those loan officers who cares about investing in yourself because you understand that you're the product, check out T-Lop's Originator Coaching. It's the #1 value in mortgage coaching in the industry. It's what everybody's talking about. It's the place that you get the most value for a small annual investment. tloponline.com. He's John Coleman. I'm Dustin Owen. That's all the time we have for you today, but we do look forward to catching you on the next episode.